Hello and welcome to this Friday's edition of India Development Debate. I'm Nayantara Rai in New Delhi. Will Indiabulls be lucky second time round? Lakshmi Vilas Bank's board today approved a merger with mortgage financier Indiabulls Housing Finance. As far as the deal metric goes, for every 100 shares of Lakshmi Vilas Bank, shareholders will receive 14 shares of Indiabulls Housing Finance. Remember, the merger was rejected a few years ago, or should I say Indiabulls Group's foray into banking was rejected a few years ago. What's changed since then? What could the possible synergies be? What is this going to mean for the banking landscape? That's all we're going to discuss today on this edition of India Development Debate. Ajit Kumar Mittal, the Executive Director at Indiabulls Housing Finance and who's slated to become the Executive Director of the amalgamated entity, joining us live right here on India Development Debate. After that short interview, we're going to be joined by the former RBI Deputy Governor, Mr. Gandhi, and our in-house expert who we turn to for anything on banking, Maithili Busnamath. Mr. Mittal, I'll come to you first. You're the newsmaker of the day. Indiabulls finally looking at a new route, if I could call it that, to fulfill its ambitions of having a bank. You tried once earlier, you were rejected. There were concerns about Indiabulls Group being a conglomerate, the exposure to real estate. So before I get down to the road ahead, can you share, Mr. Mittal, why Indiabulls Group and Indiabulls Housing Finance is so confident of getting the blessing of the Reserve Bank of India? What has changed since your last application to the Reserve Bank?
Well, thanks, Nayantara, for having me on the show. A small correction, first of all, if I may. You said that in our first foray, our banking application was rejected. Well, let me just correct you. There was no question of any rejection. There were 27 applicants, if you remember, out of which only there were 2 candidates that were given license. One was IDFC Bank, the second was Bandhan. So to say that all other 25 applications were rejected is far from true. And yes, you could only give licenses to 2 people as against 27 people who applied, but that doesn't mean that we were rejected. Coming to your next question as to why we think this is a feasible sort of roadmap for us. Well, a lot has changed between 2013 and 2019. As you yourself said, there have been a few instances in the last year and a half. Gruh Bandhan is the most recent example. Before that is the IDFC Capital First merger. And a year before that is also IndusInd Bank with Bharat Financial Inclusion. So what was clearly not in existence in 2013 was a clear roadmap for the NBFC's sector, particularly the companies which had a very credible track record in financial services. Come 2016 and you had a very well defined, very crystal clear and lucid master directions from the Reserve Bank facilitating such mergers between banks as well as non-banks and banks. Also, what you didn't have at that point in time, back then in 2013, was the absence of any kind of on-tap licenses for the private sector players. What you have now is guidelines which clearly define as to who are the eligible, who are not eligible, what are the fit and proper. So, having said that, all those parameters we have studied deeply and we are fully qualified, fully eligible on each and every parameter. Coming to your next question about the real estate exposure, well, let me put things in perspective. Yes, the group has some. Yeah, please go ahead.
Carry on. You were talking about the real estate exposure. I wanted to come to that aspect.
Yeah. Yeah, exactly. Well, in 2013, our real estate, the component of real estate business in the overall business was a little higher. In last 5 years, what has been happening is while our financial services business, both in terms of assets, income and revenue and profitability has been growing exponentially, our real estate business has actually shrunk, both in terms of assets as well as income. And now you can't have a very subjective kind of parameter real estate business. Well, nowhere it has been defined that real estate business or financing per se is anathema to regulators or anything. After all, it's a bona fide activity, particularly in times like this when the government is so supportive of the affordable housing. So to say that, you know, we as housing finance companies are contributing to creation of housing stock in the country, and government has been extremely supportive of that. So whether we are on the developer side or in the financier side, is not as if housing sector per se is you know, a bad word. Having said that, at the current point in time, our exposure as a developer in real estate is so insignificant, so trivial compared to the overall revenue and overall assets and income of the group. And RBI has very clearly laid down that you know, the groups which have other businesses, not more than 40% of their income or assets should be from the non-financial services. So we are miles ahead of that in terms of our revenue from financial sector. We are close to 80%. Revenue, assets, everything, we are more than 80% today. So that's the key difference between what it was in 2013 and today.
Okay, I take those points, Mr. Mittal.
I have been
in fact, you know, Mr. Mittal, some of these points that you're highlighting is running, you know, alongside your interview in the graphics format. But having said that, before I go on to the road ahead and why you chose Laxmi Vilas Bank, how you trained your guns on Laxmi Vilas Bank, the future that the amalgamated entity could have once it has all the regulatory approvals, I just want to address one more elephant in the room. IL&FS and the Freaky Friday when we saw what happened to Indiabulls Housing Finance as well as Dewan Housing. Could that act against your wishes, your ambitions of entering banking?
Well, Nayantara, if you see every 4 or 5 years, you have some sporadic episodes of you know, volatility, instability in the financial sector. This time it was IL&FS. You know, some of the housing finance companies also did become collateral victims of that situation. But at the same time, for us, the issue is not solvency or survival. We were pretty well you know, capitalized. We are extremely liquid. If you have seen some of our statements, even 31st March, as of 31st March, we were carrying close to 27,000 crores of cash and cash equivalent on our balance sheet. So, but yeah, there are always knee-jerk reactions to such market episodes. And yes, to that extent, there was some impact, at least initial few months. But having said that, you know, the is kind of a natural evolution for us, you know, to transform ourselves into a bank. We have been in the lending business, and that too across the entire spectrum of lending, be it retail mortgage business, lending to SME sector, home loans, construction finance, lease rental discounting, pretty much everything which banks do, we have been doing, without being a bank, of course. So what it does, you know, this kind of merger possibility is that we sort of have access to a permanent and diversified and cheaper source of liabilities. So this alliance with the LVB bank, for that matter, I mean, you also have to go with whoever is available in the market. This bank, as you said in the interview earlier on, you prefaced your statement by saying that the bank was in need of capital, they were struggling with issues of asset quality, so on and so forth. Yes, that's true. So what we bring on the table is a very high level of capital, very solid asset book, which is almost 100% collateralized, high yielding assets, good, very high, you know, profitability margin. So everything we bring. What the bank, LVB Bank, Lakshmi Vilas Bank brings on the table is a very sort of well diversified geographical presence in terms of large branch network. Of course, they are predominantly present in South India, in Tamil Nadu, Karnataka, of course, with some presence in Maharashtra as well. Whereas we are very majorly, you know, predominant player in North and Western India. So that gives us a kind of pan-India footwork, you know, and also a bouquet of products which traditionally as housing finance company or NBFCs we cannot, and also some of the, you know, fee income activities that we can. So net this is going to be a very synergistic alliance, and for us is a transformational sort of opportunity. And for bank, they have access to very solid capital pool, they have access to very good high yielding assets and very robust financial balance sheet.
Okay. Thank you, Mr. Mittal, for actually, highlighting what the synergies are and how it is that you trained your guns on Laxmi Vilas Bank as well. That was actually going to be my next question, and you preempted it in your answer. Before I let you go, I just have one more question for you, Mr. Mittal. You've told us the synergies. You've told us what Laxmi Vilas Bank brings to the table, why it is that you selected Laxmi Vilas Bank, and how it was one of the players that was available as far as consolidation goes. You've talked about what a strong capital base the Indiabulls group has. There are a lot of other smaller banks in southern India. Could we look at Indiabulls and Laxmi Vilas Bank in the future, looking at other banks? Is that at all on the table? Also, you cannot not be in digital world today. Your other company, Indiabulls Venture, has acquired a fintech company, I understand. Will we see synergies from that front with respect to Laxmi Vilas Bank? Is it an all-rounded strategy where you will be in fintech, digital banking, as well as traditional mainstream banking?
Well, Indiabulls financial services, as a financial services player, has been pretty strong on technology. As you know, the very backbone of our group has been on technology. These, essentially our founders have been, they are IITians, they have very strong technology background. And if you know, they were the pioneers and they revolutionized the online trading. So, and we continue to evolve as, fintech player in the country. But the company that you mentioned, of course, is a different company. Is part of Indiabulls Group, but it has got nothing to do with the Indiabulls Housing Finance company, and it's predominantly in consumer finance and personal loan space, where it is very, very strongly leveraging on its tech capabilities. So right now, it's very early days for me to comment whether there would be some kind of interlinkage or some collaboration between the bank, the merged entity, and that particular company. Yes, they have recently acquired a mobile wallet, a digital wallet, a company where it comes with the complete technology backbone. I mean, right now we have picked up 43% stake, but going forward, that could probably be 100% owned by Indiabulls Consumer Finance. But that company is completely separate with a separate management. Of course, it's part of the Indiabulls Group, but it is not linked to Indiabulls Housing Finance.